Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
G'day, welcome to the Australian Property Podcast. This is our weekly 2 cent segment. I'm Pete Wargent. I'm here with Chris Bates. Hi, Chris. How's things?
Pete, life's good, mate. Good to catch up with you at the Sydney event. And you jumped straight in a plane and you've gone to Cairns for a week of holidays. So tough life you're living there.
Yeah, travelling around a bit at the moment. Yes, we did the Rask Roadshow down in Sydney this week. We had a really good turnout. And you can actually watch that back. They recorded that as a live stream, so you can check it out on YouTube if you didn't join us live. And yeah, really good event. Some excellent presenters this year as well. And we did a nice little property panel there towards the end with Amy Lunardi, our co-host on the Australian Property Podcast. So it was all in all pretty good, I think.
Yeah, it was absolutely. It was Glenn James there. Owen did a segment, Future Generations around. I think that was. I hadn't actually heard of them before, actually. So that was a really interesting segment around. I guess investing via an investment trust, or unit trust, I guess, that with no fees really, and you just basically donate 1% to charity. So that was really a clever model. So what are we going to talk about this week, Pete? We're on a mission to become Australia's most trusted property podcast. We're about 6 months into that journey now, which is crazy. And hopefully we're making good ground. What are we going to talk about this week, Pete?
Yeah, so I guess, we've been juggling a few different things because we keep missing out on properties every time we go to buy, especially in Brisbane. We had one in Mount Gravatt this week and there was 17 offers and we've missed out on a couple of auctions. So, yeah, we're just trying to juggle actually getting properties bought with delivering some high-quality podcast content. So that's been a challenge. But, so 3 stories this week. Chinese set to pounce on Australian property. There's a few different articles. The Australian, we had Macro Business, and also the research or property group Juwai also talking about that. So with the Foreign Investment Review Board figures confirming an increase in Chinese investment. Secondly, Oz property prices returned to record highs. That was another piece in the Australian. PropTrack have reported a total recovery, at least at the national level, in Aussie property prices. And then thirdly, a couple of pieces in the Fin Review talking about farmland returns at an 8-year low due to weather cycles and El Nino. So I think just a broader chat about what's happening in the commercial property space, not just farmland. There's been some interesting challenges in the office world as well. So those are our 3 sort of themes for this week, Chris. So let's start with the first one. Chinese buyers returning to Australian property. So Juwai says inquiries are up 76% year on year in Q2 after 3 years essentially of lockdowns. Also, the Foreign Investment Review Board, which are more official figures, saw a 40% increase in approvals for Chinese buyers in the 2023 financial year. I think we were just chatting before we kicked off, Chris. I think the Foreign Investment Review Board figures are usually where foreign buyers are buying new property and they're seeking approval to buy those. But I think often the bigger issue, what people are often more concerned about, is the pathways for foreign money to find its way into established property. And the pathways have really been shut off for a few years. We didn't have the international students here. We weren't getting Chinese tourism in particular, and in fact, tourism from anywhere. And now those pathways are starting to open up again. And there's a few people speculating that with the borders now reopen and there's a bit of a lag effect, all that money that wasn't invested, we're now seeing a bit of a catch up.
Yeah, I mean, if you look at the numbers in here, and they sound big numbers, billions of dollars. But I mean, you got to remember the Australian property market's worth about $10 trillion, right? And so each year, there's probably around $300 billion of lending that sort of happens, whether that's refinances or purchases. Maybe it's about 120 or to 50, $150 billion of purchases each year. So, if we're talking a few billion dollars here, it's not going to move the needle. But ultimately, it can move the needle in certain pockets, in certain suburbs where there's a perception that money's coming in, there's a new source of money coming, and that just creates a bit of competition, and then that can spread. So it can have a contagion effect. It might not have a individual effect on at a transaction level that much, but it's just a confidence boost to certain pockets that can spread. And I don't think these are anywhere near the numbers like it was in 2014, 15, 16. But I think that the capital flows out of China, starting to begin, I guess. And I think that's just, more positive for some pockets of the market.
That's exactly it. I think the concern in real estate is that the marginal buyer can make a difference. So if you go to an auction, and look, I remember this from a decade ago, you turn up to an auction and there'd be plenty of buyers there, some of which wouldn't be, or some of whom wouldn't be speaking English, and there'd be sort of people sort of looking with accusatory glances and that kind of thing. But if somebody bids an extra $50,000 or $100,000 on top of the end of an auction, the marginal buyer does make a difference in that sense. Now, the catalyst for Chinese demand returning was China's decision to reopen its borders, which only took effect in January. It's gone for a long time. And of course, the Chinese government then subsequently issued an edict that said foreign enrolled students had to get back onto campus for face-to-face teaching. So now we've got record numbers of international students. I think, yes, you mentioned capital flight. I think for some Chinese buyers in particular, there's definitely an aspirational thing, wanting to own home or property or real estate in Australia. Now, Juwai have said this time around, they're saying there's much more demand from families buying dwellings to live in. I think if you went back to pre-COVID, there's a lot of the foreign buyers who are buying inner city apartments, but they're saying this time around people are buying townhouses, houses and large apartments from the 1.5 million, 2 million, 2.5 million and up kind of price range. So yes, you're right, Chris. I think if you went back to the previous cycle, it was lots of off the plan units and apartments, but this time around a lot of the foreign buyers have really been put off because there's a stamp duty surcharge to buy new property, and it's not really that appealing to pay 9% or 10% transaction costs. And instead, where people have got the opportunity anyway, people might be looking to buy family homes or larger dwellings, but not always brand new.
Yeah, and I wonder if there's a bit of a understanding of what's a quality asset. Maybe everything's been happening in China with Evergrande and some Country Garden. I think is another big one that's had some issues, and maybe they've realised that maybe the off the plan high density apartments isn't, and maybe they've seen what their friends and family have done in Australia. Maybe they're thinking, actually, maybe I don't want to buy these new apartments. There's more money to be made, and it's better, security of my money in land. And I do think that the government's going to look for foreign investment to drive our building cycle. The reality is, a lot of mum and dad investors here don't really want to buy off the plan apartments for investments anymore. They've sort of, the veil's been lifted, building issues, underperformance in capital growth, supply issues, selling issues, etc. So they're going to need someone to basically fund these builds. And so I reckon these, foreign surcharges for stamp duty could be removed, and they could go looking overseas for the money to basically do our next, round of building. What's your thoughts on that, Pete?
Yes, I think so. I mean, as we've talked about previously on the podcast, most Aussies don't like to really buy those big tower block apartments off the plan. And it was really the previous cycle, which was the biggest construction cycle we've ever seen in Australia, was largely driven by non-resident buyers buying off the plan. I think possibly quite a few people got burned doing it that time around, and maybe there's less sort of demand for it this time. But yes, governments can put incentives in place if they want to lure buyers back into that type of property. And there's certainly definitely an increase in the potential pathways. South China Morning Post reported Chinese immigration into Australia is about to top pre-pandemic levels, in part lured by the prospect of owning Australian property. But yes, Juwai's MD Daniel Ho said that many Chinese live here already as permanent residents or have 2 passports, but they definitely this time around looking for larger apartments, townhouses, single-family homes. They're less likely to purchase a 1-bedroom or small 2-bedroom inner-city apartment this time. So, yes, I think that just goes back to what you said. People may be a little bit put off by the results last time where they paid top dollar for new apartments in some of those areas around Homebush and Western Sydney, and prices really didn't go anywhere for a decade. Maybe just looking at a slightly different option this time. So if the government's going to get construction happening, they might need to put some incentives in place, and they almost certainly would need to remove the stamp duty surcharges, I think, if they really want to get that sector moving.
Yeah, if you could cut stamp duty, make it much easier for foreign money to buy apartments here, and that if you can't get locals to do it, maybe that's our option, is to get international money, and maybe that also is attached to migration. If you buy a certain amount, I can see these sort of things happening. That we've got a rental affordability crisis. The government can't afford to build all these apartments. Consumers and mums and dads don't want to buy them as investments. Well, who's going to buy them, right? And a lot of first-time buyers don't want to buy them because they also realize that they're not the greatest investments. And so I think that's a solution needs to be found. I think foreign money is going to be potentially one of them. So story number 2, P, what should we talk about?
Yeah, so actually, as you said there, I mean, the event we did this week was in Kensington, which is obviously a big university area. And we had some of the people in the Q&A saying we've got rental leases expiring and the rent's going to go up 50%. And what do we do next? And there's a lot of pressure there. And that is largely driven by the return of international students. We had a kind of a vacuum or an air pocket there for a couple of years where they weren't around. And suddenly they've come rushing back in record numbers. And the rental market is absolutely crush loaded. That flows into, I suppose, our second story. Aussie property prices returned to record highs, reported in the Australian. So PropTrack have said that prices have fully recovered their downturn by September 2023, which is quite a bit different from what some people had forecast. Adelaide, Brisbane, Perth, all back at record highs. Sydney, 0.3% below record, so more or less back to record highs, driven by record population growth, very few forced sellers, low stock on the market, rising rents, and also soaring building costs. And looking ahead, projecting steadier growth, but growth nonetheless in 2024 and 2025. So, Chris, this is something we've touched on a little bit before. There's been some doom and gloom forecasts around the traps over the last 2 or 3 years, I guess, but none of which have really come to pass. And now we're back to where we were.
Yeah, I think this is where the positive feedback loop will really start to kick in, right? So when people start noticing that prices are higher than they were 2 years ago, that real FOMO really will start to take off, right? Because they'll be like, wow, I've really missed the boat here. If I don't get in now, it's going to be, particularly before rate cuts, etc. And then I think they're going to really quickly get factored into prices. I mean, Chris Joy hasn't come out and sort of admitted that his expectations of where the market was going were wrong. And even though interest rates went much further than he thought they would, but Jarden had a similar bet. They were thinking 15 to 25% falls, even as early as 2023, I believe. And, the team there came out with an amazing report this week. I love when people sort of admit that they didn't get it right? And then relook at their decision and say, what did we get wrong? And Jarden did that with a report. And what they probably also highlighted in that report was that intergenerational wealth, the amount of money transferring down the generations and the impact that is given to support prices was completely underestimated. And this is something we've seen on the ground. We've just seen the deposits our first-home buyers in particular are getting from parents and grandparents have been enormous. So not everyone's fortunate in this situation, but there's a lot of wealth. When you think about this, the property market's worth $10 trillion, but there's $2.2 trillion of debt. So that's not including money in offset accounts as well. So, you've got maybe $8 trillion of equity there that, is getting passed down and getting multiplied, because when they pass it down, you pass it down to younger generations who usually use that money and leverage it, whether they're leveraging it into upgrade or whether they're leveraging it into their first home. So I think this is what's going to happen. Unfortunately, the positive news, we're seeing lots of articles coming out with suburb records, new suburb record set. Like if that's continually talked about, well, then people are saying, wow, it's the highest it's ever been. Maybe I need to get in before it goes even higher.
Absolutely. There's no question that we've missed out on several properties that we appraised more or less at record high prices, and we still missed out, and with multiple buyers going in over the top of us. So certainly in parts of Brisbane, we've seen it, and probably in other parts of the country too. On the interest rate point, yes, a bit of a mea culpa there, because I certainly didn't think that the cash rate target would get to above 4%, and yet here we are. So not everybody got that one right. In fact, not even the Reserve Bank themselves. Now, interesting comment here. Senior economist from PropTrack, Eleanor Cray, who are hopefully going to get on the show in the coming weeks, actually, said the general lack of housing combined with higher migration is squeezing the market and outweighing the impact of interest rate rises. This is as reported in the Australian. She said, looking ahead, interest rates have likely peaked and population growth is rebounding strongly. Together with a shortage of new home builds, prices are expected to rise. So as we head further into spring, more markets will reclaim 2022 falls and set new peaks. I think the interesting thing here, she's calling a peak or likely peak in interest rates. Now, since that article went to air, we've had a whole week of record high bond yields in the US, or the highest we've seen since 2007. So you could get 5% on a 10-year US government bond, which is something we haven't seen in over 15 years. And I think, generally you would say if you can get 5% on your money, lock it up for a decade, completely risk-free, then that should push down asset prices. But of course, a lot can change and quite quickly. And in fact, overnight, as we record this, the oil price fell by well over 5%, and yields have come tumbling back down. So, yes, whether or not we do get another rate hike later this year, early next year, we don't really know. But usually what happens when you see a big spike in yields like this is they come back down again pretty quickly, just as fast as they went up. So, as you said, I think people are starting to anticipate potentially interest rates coming back down the other side sometime over the next year or two.
So there's two lines of thought. One group's basically thinking the rates are going to stay high for longer. Inflation's going to be ridiculously sticky. The green energy transition, oil, just lots of different reasons why inflation's going to stay really high. And, the wealth effects right now, like house prices going back up should lead to more inflation, right? And so there is that belief. And I mean, even the markets the last week or so, there's that been at least been perpetuated a little bit, inflation figures maybe jumping up, not as dropping as low as, people have thought as fast as it was dropping. So, but, I think that story's flipped around so much in the last, 12 or 18 months. And I would say there's generally a pretty good pace to its decline, and it's looking like it's getting under control. I think the interesting thing I would say with prices at the moment is that if you go back 2 months ago, and we spoke about this on the podcast, there was this belief that listings were going through the roof. And, I did a post saying, really, I just don't think that's true. I just think people are selling earlier this year when they usually would sell later in spring. And, when you look at CoreLogic sort of listing numbers, they're pretty much back in line with what they would be at this time of the year, if not under what they usually would be. So there was a lot of listings coming on, in winter, and everyone thought that was a sign of distress. I just thought that was people selling a bit earlier in the spring season, and it's kind of proven to be the case. The listings are still very, very tight. There's more sales than there are listings, and so that's not considering it's already October. We've basically only got another 4 to 6 weeks before listings will really dry up, and if they stay really tight for the next 4 to 6 weeks. And sentiment starts to pick up early into next year, that's not going to be a great news for people who are hoping prices fall.
Yeah, there's a decent increase. SQM Research reported this week an increase in listings through September. But even for Sydney, listings are essentially only back to where they were a year ago or a little bit below. So, yes, more people are bringing properties to market. But actually, overall, stuff has been absorbed pretty well so far through this cycle. But yes, I mean, we're already into October, and before you know it, we'll be on the wind down to Christmas. It tends to happen pretty early in Australia. As you know, people like to start clocking off and thinking about their summer break. So there's not too long to go in this calendar year before the listings start falling away again. But at least we're starting to see a little bit more stock come on. It's a good point, Chris, and it flows into our third story that for every buyer, there has to be a seller, I guess. And, we often focus on what buyers are doing, but there's the sales trends to look at as well. AFR, 2 articles from Larry Schlesinger on farmland returns. Farmland returns dropped to an 8-year low on El Nino. So I guess there's a cyclical element to that industry. And it sounds like with weaker commodity prices and the El Nino weather cycle, a number of foreign sellers have been locking in gains at sky-high prices, which has just pushed down farmland prices a little bit. So total annual returns from prime farmland, despite record high yields in recent years or record agricultural yields, total annual returns fell to the lowest level in 8 years. Permanent returns down 6.6%. And it looks like if you look at the Ray White analysis of offshore investors, well, it looks like only Canada saw an increase in investment, and lots of other sort of offshore investors have been offloading real estate, and also Gina Reinhardt and a Chinese partner selling off vast chunks of their stations, hundreds of thousands of hectares being offloaded, Queensland, Northern Territory. So, yeah, there's been a big run, obviously, on land prices, and we've had some very high yields from crops in recent years. But it looks like some people are locking in gains. And I suppose that's what you often see in real estate cycles. Prices go up, people like to lock in their gains, and then prices ease off again.
Yeah, I think the reason why this is interesting is that a lot of people think about property and they just think houses, and they don't really think about apartments and townhouses, and they don't think about the super high net worth estates. They don't think about bigger apartments versus small apartments. So let alone in residential, there's so many different types of assets, inner city, outer city, rural, coastline, beachfront. These are all different types of property, even smaller houses versus bigger houses, busy roads versus quiet streets. So I think when you think about residential, there's so many things you kind of want to think about. The commercial is a whole other level, right? And so when we're talking about people can invest in farmland, to offices, to industrial, to and the list sort of basically goes on, right? And I think there's so many elements of that as well. There's the small offices versus the big high rises in the city. There's retail shop fronts versus Westfield, etc. And so I think there's a lot of money going around in the commercial space, and usually most people don't get exposure to this just because of the purchase prices to enter into these assets. I mean, the farmland, the quality farmland properties must be hundreds of millions, probably of dollars. But there's a lot of money. That's where a lot of the big end play. But you can only play there if you've got a lot of money, right, Pete?
Yes, there's different things here, aren't there? So, full disclosure, I do own farmland in the UK, partly because my wife's from a farming family. But yes, there's different ways that people go about investing in this. In the UK, it's popular because it's inheritance tax free if you actually genuinely run agricultural land, so cropland, for example, or running a farm. In Australia, I think for small-time investors, it's sometimes popular. People like to own a hobby farm, or if they have a farm that's in close proximity to places like Byron Bay or those really popular resorts, then they can also run Airbnb properties on the same property, and therefore, you can increase the yields that way. So, yeah, so despite the decline in agricultural output, it's still the third highest on record at 80 billion. But yeah, so I think sometimes if you get farmland that's in proximity to a town, then there's potential that sometime in the future it might be developed. But yeah, it's a bit of a niche asset class. I think we've talked previously about the challenges in some of the other commercial asset classes. Retail is going through a change, I guess, over recent years, much more online shopping. Office space, as we know, has been significantly disrupted by COVID, and more people working from home at least a couple of days a week, and that's put downward pressure on office rents. Probably the best performing commercial sector of late has been the industrial property, because we've got just the economy was booming, got booming population, well located industrial properties and sheds and storage and things like that, and medical centers. There's a lot of demand. We've got a growing and aging population. So, yes, it's a very broad asset class. Farmland has taken a bit of a knock, but that's coming off very high levels. Office space, rents are down 10 to 15%, probably still falling in a lot of cases, and probably some more downside risk, I guess, for office prices and valuations. But some other parts of the commercial market doing quite well. So, yes, it's definitely, if you're going to go down that route, you really need to understand what you're buying and why, and how it fits into your overall portfolio.
Yeah, and I think that's probably a good wrap to our third story. We're a bit ahead of time here, Pete. So I'd love to just ask you a bit of a question, to be honest. And you mentioned there you've got a lot of people missing out, and that means that the market's really heating up. And try to just a quick look at SQM, and Brisbane's listings are way down on pre-COVID, right? Like it's the amount of people selling is way down. So how do you approach that, right? So you've got a brief. The market's moving faster than what you can value the property, right? How do you handle that for your clients?
Yeah, to be fair, I think it's a bit too speed. I think it's if you've got properties that are in good locations, they're family appropriate, and high quality stock, then yes, we turn up to the open home and all the other buyer's agents are there as well. And that's really challenging. There's only so much magic that a buyer's agent can work. I think a lot of this is in research and preparation. There's only sometimes so much you can do. I think you're right. If you went back to 2015, 16, 17, there was so much new construction happening. And even though a lot of that new stock doesn't hit realestate.com necessarily, but it does have a knock-on impact. People decide to buy a new property to move into, and then they sell their existing one. And stock levels were pretty easy for a few years there. There's plenty to go around, and there wasn't much pressure. Lots of auctions passing in, and loads of scope for negotiation. Well, that's completely shifted around now. We've got an undersupply of housing, especially in Greater Brisbane, but actually in other parts of the southeast Queensland as well. So yes, you need to know exactly what your budget is. You need to know what your brief is, and there's no sort of magic bullet. The main thing you can really do is speak to the real estate agents in the area you're hoping to buy in to try and get first look at a property, or sometimes even buy pre-market or off market. But yes, if you get involved in an auction or a bidding war where you get 17 offers like we did this week, yes, the odds of you being the winner and the winner at a decent price is very slim, really. So yes, that's definitely what we've experienced. I hadn't seen the SQM figures, but I'm not surprised to hear what you say, because it definitely feels that way. Population growth running at around 2.5% for Queensland. In some parts of the state, it's probably well over 3%. It's absolutely booming, and we're just not building enough at the moment.
And what's your general vibe with Brisbane and the Olympics? What's your take on? Because a lot of people think that, I should buy in Brisbane because of the Olympics, but what's your belief around all that?
Yeah, I don't think it's a reason in itself. I think, people have often brought up research to show, yes, in some of the London boroughs, prices did really well with the London Olympics, and you can go back to the Sydney Olympics and say something similar, but it's really part of a broader story. Yes, it does bring a lot of capex and investment to the city, and in fact across the region, really. But it's only one part of the story. I think Brisbane's competitive advantage over the past decade has been it's smaller, there's more space, it's a bit cheaper than Sydney and Melbourne. So there's plenty of businesses now that can place themselves in Brisbane with a decent amount of talent, and we're starting to see that reflected in the demand for housing. So a fair number of people at the Sydney event actually are Brisbane based, but previously lived in Sydney and moved up. Well, that's a very, very common story in Australia. New migrants tend to go to Sydney and Melbourne, but internally, people move to Sunshine Coast, Brisbane, Gold Coast, and that strip really from Noosa down to the Tweed and northern New South Wales. So there's a lot of pressure on that strip of the country, and yes, the investment, the Olympics will bring a lot of investment, certainly in terms of infrastructure and new stadia and so on. But that's really an ongoing thing for Brisbane. There's the new rail projects going in, stadiums getting upgraded, so it's not just a one-off thing. And also down at Queen Street there, great big wharf development going in, multi-billion-dollar project. So there's lots happening, and it's all pretty good. And
is there much the government's doing to, because what will really drive Brisbane prices, in my belief, is when talent or business owners think, what, my head office or our current head office in Sydney, Melbourne, it's much more affordable for our staff to do this in Brisbane. Why don't we move to Brisbane, right? Or why don't we open our business up in Brisbane and that be our head office where there's enough talent in Brisbane to do that, rather than start the business in Sydney and Melbourne where they think there's more talent. So what's the state government doing to encourage businesses to open up there and, drag them away from other CBDs?
Oh, there's plenty of it. If you look at insurance, financial services, mining, there's lots of big companies you'd recognize on the buildings, a lot of very familiar names there. But I think the real game changer over recent years has been some of the bigger players saying to people, well, look, you can base yourself in our Brisbane office. You don't have to be in Sydney 5 days a week. And a lot of people have taken advantage of that. So I don't know that the state government has specifically put measures in place to make that more accessible. I know they announced a new investment in internet speeds yesterday, but I'll believe it when I see it. We always seem to lag behind in Australia. But I think just generally, Queensland had a pretty good run, and I guess unlike some of the other states, we've got big revenues from resources. So we're not drowning in debt to the same extent that certain other states have been. So hopefully they can make investment a more attractive proposition for businesses and for individuals. So I think sometimes the endless changes in tax settings can put people off a little bit. Certainly seen that in Victoria recently, and Queensland's had a fair few goes at it. So stable structure and certainty of the outlook would definitely help in that regard.
Yeah, and I think obviously the rents or the yields in Brisbane, are much higher than other cities, like in particular over Melbourne when you're buying investments. Do you think it's sustainable that rents are going to hold where they are, if not go up, because there's still very low vacancies and there's still a lot of interstate migration?
I think for the next 3 years at least, because there just isn't the building happening. So if you look at building approvals, a decade ago we saw this enormous surge, all around those suburbs like Newstead. There was just massive sort of swathes of land that weren't previously residential zoned, and then suddenly there was units going up all over the place. Inner city, Fortitude Valley, West End became a highly residential suburb. Well, we're not seeing that at the moment. The building approvals are very low, and that's largely because we don't have the foreign money to get those projects out of the ground. So I think if they're serious about supplying the market, then they would need to look at taking that stamp duty surcharge off for foreign buyers. But at the moment, it hasn't happened. And usually you find with medium density projects, it's really a 2 to 3 year project to get them actually brought to market. So even if we saw a big uplift in approvals today, the rental crisis and the shortage of housing isn't going to be solved until 2026 at the earliest. So yes, I think a lot of pressure on the rental market, and that's just going to continue for the next few years, I think.
Yeah, and I think Pete, you've been buying a bit in Newcastle way as well, right? You've got Reese working down in Newcastle for you.
Yeah, shout out to Reese. He's our buyer's agent, Newcastle, Central Coast. He does a little bit on the northern beaches of Sydney as well, but that's a really tough market to buy in. Talking of low stock levels, that's definitely a challenge. But yeah, I mean, look, Newcastle, we did a roadshow there only a couple of weeks ago. Fabulous city these days. It was known for being the coal capital, but it's so much more than that now with the universities, the big accounting firms and other businesses. The place is absolutely booming. I think the only real downside with good climate and beaches, I think the traffic could use a bit of a helping hand. It can get a bit snarled up down there, but great value from 700k upwards. You can get houses really well located. So it's popular with investors, definitely popular with people moving out of Sydney. So many people there. You mentioned Glenn James based in that part of the world, but so many people moving out of Sydney as well because affordability challenges is pushing people into Wollongong, Newcastle, Central Coast, those kind of areas. The place is absolutely booming, and we're getting some really good investments and people moving up there as well.
Yeah, absolutely. I grew up in Newcastle, so I know it well, and I didn't think I'd ever move back to Newcastle. I don't think I will, but I do go up there a lot more to see my mum, and it's hard whenever you get close to Merewether Beach. You still start thinking maybe I could make it happen, and I think a lot of people who grew up in Newcastle are moving back. They're getting to that family stage. They want to be around their parents, and that's much more affordable and much more easier life as a family. You can get a park at the beach, and you can still get your city income if you want. A lot of jobs will give people that flexibility. So there's lots to love about.
I remember going there in the 90s, Chris, and the reputation Newcastle has was, the pool balls would stop rolling if you weren't a local and you went into the pubs. But we did the event of the Ship and Anchor down there. Fabulous city these days. No sense of it being a second fiddle to Sydney. The place is absolutely rocketing ahead, and it's only getting more and more popular now.
Yeah, absolutely. All right, Pete, what's on for this week? Just time at the beach in Cairns, and
well, yes, I've got a week's holiday, so it's not all work. Just up in Cairns, taking the kids to the reef. Never been before. They haven't, and I realised my daughter's nearly 9 years old, and she said she'd never been to Cairns. So I thought we'd have to show her the sights. So it should be pretty good. Nice 30-degree climate up here. So yes, we'll look forward to checking in with you next week, Chris, and let's see what the week brings.
Awesome. Send your questions through, and we look forward to chatting to you all next week. Happy Sunday.
Cheers, Chris.